Recent discussion around clawbacks in specialist lending has prompted Trobe Financial to take a tough stance. We spoke to Paul Wells, Chief Investment Officer, about why, and also why brokers should be taking advantage of Australia's niche credit specialist market.
As a specialist lender, we don't have a large branch network. We rely completely on brokers for our originations. It's important to us that their value is fairly recognised. We believe that where a lender agrees to pay the cost of acquisition for a loan, the broker shouldn't subsequently have that payment taken back for events that are outside their control. That said, brokers need to recognise that the more they ask for up front, the more likely that may depend on value that is only created by an extended loan term. That's particularly somewhere that near prime lending stands above prime lending in our view. Most specialised lenders are able to charge the borrower an upfront fee, and that fee is more than enough to pay the broker their upfront commission in full. So you don't need an extended loan term. Now, a question seems to be emerging in specialised lending as to what that upfront payment relates to. Traditionally, it's an application fee, and that covers the work undertaken in underwriting the loan and in onboarding the loan into the systems and in paying the broker their upfront commission. We observe some lenders now characterising that fee as relating to something other than the upfront work. We disagree with that. If it is a risk fee, then in effect the clawback means the broker is subsidising the lender running a discounted borrower rate, and we don't think the broker should be responsible for that either. For Trobe Financial, by recognising that fee as an application fee, even if the loan discharges early, we've got no reason to try and claw back that commission.
Wells feels strongly that the near-prime space is doing well for a number of reasons.
Experienced lenders and brokers know that near-prime residential and commercial borrowers are an important long-term segment of Australian lending, and that they can be lent to successfully and responsibly. As an issue underpinning near-prime lending, what we've seen is the funding markets have now come to understand and agree with that in the recent years. They're now backing near prime strongly, and most importantly in our view, we think that's much more reliable over the longer term. The other issue that's cleared out is the new consumer regulation that came in 2010. Legislating responsible lending was always going to be a good thing, because inversely, inevitably over time, it was going to leave a defined space for specialised lending that was approved by both legislation and by ASIC. That's now happened. The aggregators and brokers are progressively realising that, and they're re-engaging with near prime very strongly.
So why does Trobe feel that specialist lending is relevant for brokers?
Two reasons: as a source of immediate additional revenue and strengthening their client relationships. The additional revenue comes from two sources: existing deal flow. To do that, the specialist lender has to be very good at limiting any additional work involved in these deals, making sure it's fast and efficient for the broker. Existing relationships is because we take a view that specialist lending should not only be residential, it should include small commercial, small construction and some specialised assets. And so for some brokers, those deals are beyond their scope. We don't see it that way. From our perspective, one of the skills of a good specialist lender is to be able to leverage their servicing, their documentation and their broker education skills to bring those sort of deal flow within the scope of the broker. By doing that, you're also then strengthening the client relationships because you're able to meet more or maybe even all of the broker clients' needs.